YouTube. What's good? We're back again with another investing video. This time we're going to be talking about Apple stock. The current balance of my position is $1,710. As you can see right here, I'm going to try to zoom in. I have unrealized gains of $388. So I'm up $388. That's very, very good. The current price of the stock is $142. It exceeded expectations when it came to the earnings report. Now, before I even get to the earnings report, is it a good buy? Because I told you guys, listen, I'm winning. You guys could have been winning if you listened to my videos and you actually took the position when it was at 130 or 127 when it was at that point. I did videos of it. But if you don't listen, that's on you. Of course, I'm not a financial advisor. You do what you think is best for your money. But at this point in time, I would obviously wait for a slight dip to put my money in little by little, try to have a better cost basis when the stock actually goes down a bit. And then I would definitely be adding more throughout the year because it's a great hold. I feel like it's a great buy. 70% on Robinhood when I saw it in terms of a buy option of actually buying the stock. So I feel like it's going to be a good buy. Just wait for a dip. Don't buy right now at 142. Now, when it comes to the earnings report, it exceeded the earnings per share, $1.68 versus the estimate of $1.41. When it comes to the revenue, definitely did great. $111 billion versus the $103 billion estimate, up 21% year over year. And it's just so obvious that why try to go for stocks that are lower price? Sure, you want to do swing trades, but why don't you go with the winners? I don't understand people try to chase fast money. Why don't you just go with the winners? This is, even if it's only up 12% in your mind, that's way better than having money in your bank account with just 1% interest on a savings account. 12% is great, right? But it is what it is. People don't think like that. iPhone revenue, $65 billion compared to the estimate of $59 billion. I'm going to try to zoom this right here because people might not be able to see. Up 17% year over year. Service revenue, up 24% year over year. Products revenue, up 29% year over year. $12.97 billion compared to $11.96 billion. Mac revenue, people, you might see this right here, right? And you might think to yourself, okay, it did close to the estimate, right? 8.68 billion, 8.69 billion. It's up 21% year over year. Think about the M1 chip. The MacBook Pros are going to have that M1 chip, right? If I'm not mistaken, they're already having it. But it's not, you're not going to see that cycle be reflected currently. Once it actually reflects in a year, you're going to see some great gains. And that's what I'm telling you. Think slightly long term, like at least a year and a half in the future. Put your money now and invest it. Make your money make you money. But it is what it is. Some people don't think like that. iPad revenue up 41% year over year. The iPad, I like the new iPad. The fact how they actually made the iPad really feel like it's a replacement for laptops in a lot of cases, even for editing, because back then it just felt like it was a bigger iPhone. Not at this point. I feel like it's actually its own self. Gross margin, 39.8% versus the 38.0% estimate. So obviously Tim Cook said that he's very happy about how excited people are about our products and about Apple overall. But my point is, finally, I don't have to keep showing you, as I've already showed you, how good they're doing and they exceeded expectations. My whole point is, make sure your money works for you. Don't only work for your money. Put some of it right now. When it gets a dip, then if you feel like it's going to dip a bit more, that's why you don't put all your money at the same time. You keep putting little by little, and then you realize, okay, now I have a better cost basis, right? And I'm holding this, and you'll see, like in a year and a half, you'll see the gains, and you'll be like, damn, it was worth it. It's like when people put money into the savings account, right? And they expect it to grow little by little when it comes to 1% or 2% savings account. Why don't you just do that with a stock? And why don't you do it with the biggest winner? Instead of expecting like some ridiculous amount of gains on a GameStop stock, which would be very, very volatile. Now, I'm not saying that's a bad idea because people actually make money like that very fast, right? But be careful. It's very, very high volatility. If you don't know what you're doing, you're going to end up losing. So my point is, this is very safe in that sense. You know, a company that you've seen everywhere, and you put little by little, and then you actually realize here from a year and a half from now, if you've kept adding, like if it's a bank account, you're gonna see gains a lot. And that's my whole opinion when it comes to this. I feel like Apple's gonna have a great year. I've been saying it for like 4 videos at this point, if I'm not mistaken. They proved me right here. It might go down a bit, but that's why I say that's when you actually buy the dip for sure. That's when you should buy the dip. That's gonna be it. Subscribe for some of the videos. I'm gonna keep talking about investing because I enjoy it. I'm out.